But yes, like I said, I use currencies that on a higher time frame still needs to make a high or low, and then I trade the breakout in that direction. Um, it happened a couple of times today and yesterday, and it's still busy going on now. Um, where on a 4 hour chart, the zigzag indicator made a low, but there's not been another high made or another low made in X amount of candles. Then you kind of trade it in the direction of the trend, but also in the direction of where your closest breakout would be. Um, so nothing is like that at the moment because we had all the breakouts happening today. But if I quickly scan through my charts, I can see that on the CAD JPY. So if everyone can just load their CAD JPY charts on daily. Everyone got that loaded? CAD JPY daily chart. Okay. Now if you look at the CAD JPY, let me just get this out of the way. Okay. If you look at the CAD JPY, you can see that in the last 13 candles, 14 candles, the zigzag indicator has not yet made a new high or a new low. So we know on a daily chart, the CAD JPY needs to do one of those things. We don't know if it's going to make a high or a low yet, but if we follow the trend, we can see that it most probably will be a high. And we have a resistance right above at, well, almost exactly 100.07. Okay, so now we know that on a daily, the CAD JPY needs to make a high because it has not done so for 14 candles. Then we go down to 4 hour and we look to where that level is. Now that level is the resistance above. We go to 1 hour and we see we've made a low, which is also a C. And on 4 hour, we just made a high that was our D. So what we can do now is we can either wait for the 4 hour to make another C, or you can enter for a breakout trade speculating that the market will break 100.07 where the last daily high is. So we know the market needs to get at least past that level to make a new high on a daily chart. Then we go to 4 hour and we have a look. Then we say, okay, we know price needs to get there to 100. Let me just accept this. So we know price needs to get to 100 at least because daily needs to make a high. So we can either enter a trade right now as a buy. We can buy it in right now, and then we can put our stop loss below the last low on the 4 hour chart. Now right now that makes for a 76 pip stop loss, so you can wait for price to come a bit down and then do it. But then your take profit, you know price needs to break 100 to make a new high on daily. So then you can put your take profit past that. And you can put it quite far past it if there's nothing else stopping it. And then you guys can't see now, but my stop loss is around 98. My entry is at current price, and my take profit is at, I can put my take profit at around 100, around 101 for about 166 pips. So we are effectively trading the breakout before it even happened, just because we know daily needs to make a high, so it's probably gonna break out on the upside, so we can enter the breakout trade before it ever happened. Unless you are a bit risk averse, you can enter your normal breakout trade just above 100, maybe enter at 100.1 or 100.1. You can still do that because it's most probably gonna break out high, or you can enter it right now before it ever broke out. I don't know if you guys saw on the newsletter, but I think it was a Monday, on Tuesday, the Tuesday newsletter. That is what I used on the Tuesday newsletter to predict that the US dollar JPY, if everyone can load your US dollar JPY charts. Now go on US dollar JPY on a daily chart. Now, if you get on your daily, and if you remember the newsletter, I think it was on Monday or Tuesday. Let me just have a look. Can't remember. That it said the long-term trade was for a breakout at 121. No, 122, sorry. That was our long-term breakout trade. So our long-term trade on the newsletter has been for, I think it's 24 weeks. No, just a bit less. About 20 weeks or so. That price will break out at 122 and you should go long. Now, the morning before it happened, on the newsletter, it said price will break out today, or price might break out. So just keep that in mind. And this is the strategy I used, because on a weekly chart, if you go to a weekly chart. On a weekly chart, the zigzag hasn't made, the zigzag went from, let me get you the exact dates. It went from the low on the 18th of May, no, 18th of May 2014, to the high of 2014 11:30. And that's the last high the zigzag indicator made for 24 weeks. For 24 weeks, we did not have a breakout higher or lower. So 24 candles, there has not been a break higher and there has not been a break lower. So I knew it has to break out somewhere. It has to either make a new low or a new high. Trend was up, market was indicating it was going to go up. So that is how you forecast that it will break out higher. Just because there's not been a high or a low in more than 10 candles. Today it happened on the gold. The gold was, it was on a daily chart. On a daily chart, the gold didn't make a high or low since the last high it made on the 18th. It's a shooting star, gold daily chart. So the price needed to go somewhere. It needed to make a low. So on 4 hours and on 1 hour, I knew it is selling time. Well, before fundamentals came in. that it was selling time, as we knew gold had to make a low. Gold had to break yesterday's low of 1183 or something to go and make a new low today, and it went down 60 pips odd. That is something I use a lot. It happened on the euro Australian dollar. It's been happening a lot lately as price has been ranging. But for example, let's go to the euro CAD. Let me just go through all my charts and see where we get a great example. Yeah, everything has already made the highs. Okay, if we go to euro CAD, on a 1 hour chart, you see price hasn't made a high and a low, a high or a low in the last 5 candles. But price is more towards the upside, more towards the high. We go to 4 hours, we see price has recently made a high, but we go to daily. Now if you look at your daily chart on that, you'll see also that the zigzag has not in 9 candles made a high or low. Now it has made a low, but it was not in the amount of candles we needed. So we know EuroCAD needs to do 2 things. It either needs to go up, make a new high, or go down, make a new low. If we go to weekly, we see trend is down. Also on weekly, it also hasn't made a new high or low in 6 candles. Trend is down on weekly. Trend is down on daily, ranging on 4 hours. Okay, so what is the most probable scenario for the EuroCAD at this point in time? It is going to make a new low. So what you have 2 options now. You can either sell at current price, sell at current price, sell at current price with your stop loss above the daily high, and your take profit below the daily low, because you know price needs to make a low. Okay, so if we sell right now, we can put our stop loss at around 1.3826, even a bit lower. We can go about there. Yes, I am Fricky. I'm recording it. You can watch it tomorrow or the next day. Okay. So this is our options. This is our options on the EuroCAD. I see we even have previous support where it bounced off the previous time. Okay, our options is to sell right now with a stop above the daily high, a take profit below the daily low, because the zigzag indicator needs to do something. It needs to either make a high or low. It's been 9 candles and it hasn't done so. So we can trade for the breakout from now, or we can just wait for it to get to the low and sell. Okay. Okay, on a daily chart it is not ideal, as your stop loss will be big, as here your stop loss is 176 pips, but your target is about 240, 250. But that is one way I use to spot good quality breakouts. It's just looking for a breakout where your zigzag hasn't made a new high or a new low in 7, 8, 9, 10 plus candles. So let's say price has been ranging for 20 candles. Zigzag has not made a new high or a new low, and it is close to a breakout point. You can take that trade even before it breaks out, just because you know price needs to do so. Yeah, I have an example. Okay, it's an extremely small time frame, but here I have an example. If you go to the Australian dollar, US dollar. Now, Australian dollar, US dollar, I would like you to go to 15 minutes. 15-minute chart. And you will see there, in 5 candles, price has not made a high or low. Then, if you go down to 15 minutes, if you go down to 5 minutes, you'll see price has not made a high or low in 10 candles. So price has moved 10 candles but has not formed a new high or a new low. We can clearly see that trend is down on these two charts, on half an hour, 15 minutes and 5 minutes. We know price needs to make a new low. The zigzag needs to make a new low on 5 minutes. So what do? On 5 minutes, we can enter a trade right now with a stop loss just above a high, most recent zigzag high, and our take profit far below the support and lowest low. That's not the most recent high. So we can enter a trade like that, because just trading the breakout before it happens, just because we know it has to happen. Price needs to make a low, it hasn't done so, we can trade it before it happens. You can go to 15 minutes and you can take exactly the same trade. Now you can wait for the breakout. You can actually just wait for it to break that 5-minute support at the bottom, the 0.7616, or you can enter the trade. Now you'll have a bigger stop loss, but you'll end up making more pips. Yeah, that is just the point of it. Is trying to spot something before it happens. Is there any questions?